David, thank you very much for joining us today. You've been extremely busy over the last few days, meeting with numerous people. Give us a sense of who you're meeting with. Are they investors, utilities?
Jimmy, at the WNA, this conference, we meet with a lot of people. Our focus, is on the utility side right now. But we are also seeing investor interest at the same time. So we've got a pretty mixed group. Some industry meetings as well, more on the business relationships, not just commercial. So it's a great conference for us to be able to cover all the bases with all the key people in the space.
And when I look at this year's event versus last year's, it seems to me like there's a lot more buy-side interest. Some of the world's largest investment funds are here this year.
Yeah, so I'd agree with that. I've been coming to the conference for several years. What we used to see on the investor side was like the deep uranium specialty niche investors. They'd be here in the back or in the front of some of the conference rooms and asking questions and trying to, dig more into the space. What we've got more now is generalists, much larger investors that are not specialty. And they're looking at this whole, not just uranium, they're looking at nuclear energy broadly. They're looking at how it fits in the clean energy transition. So that is a big change from when I started coming to this conference, absolutely.
So when we spoke at this event this time last year, the big news from Denison was the feasibility study at Phoenix.
Yes.
And then you were moving toward a construction decision. Maybe you can take us back a little bit and tell us what you and your team have accomplished in the last 12 months at Phoenix.
Yeah, no, thanks a lot. I mean, Jimmy, we had been working for about 4 or 5 years after completion of our pre-feasibility, where we picked in-situ recovery mining for the Phoenix deposit, which is part of our Wheeler River property. And we put out a feasibility study in June of last year. And let's say in the last 12, 15, 16 months, it's been incredibly busy as we've moved immediately through completion of front-end engineering design, a lot of which actually we had completed as part of the feasibility study. And so we were able to quickly complete FEED and transition immediately into detailed design. And so we updated with our Q2 results that at the end of June in this year, we had already achieved over 30% total engineering. So engineering team is humming along, and that's going to ramp up even further because we are targeting final investment decision in the middle of next year. Now, in parallel to that, we started a program of long lead procurement. So we raised some money late last year, really bolstered our balance sheet, knowing that we'd head into this year starting to acquire some of our actual initial capex. So we've got about a $10 to $12 million budget this year as part of our bigger budget, actually securing, making deposits and acquiring long lead items based on all of that feed work that we've got outlining when we need things and what the lead times are. So that work has kicked off full steam this year. And then, of course, multiple tracks of things going on. We're also moving the regulatory forward. So years into the environmental assessment process, but we've made some really significant progress towards finalization of the environmental impact statement approvals by both the province and the federal government. So late 2023, we heard from the province that our EIS met their requirements and we could submit it as final if we wanted to. We haven't because we're working towards synchronizing it with the federal EIS review. We haven't seen the provincial approval as changing the critical path to this point. But, that could change. And, but we are making very good progress also on the federal review. So a lot of people are watching the information requests and the public disclosures on these EISs. We are really getting that number of outstanding items down to quite a low level. And we're optimistic that we can be finalizing that shortly. So hopefully that's a 2024 item that we can close. And then sort of that last stream of work over the last 12 months has been project finance related and commercial discussions with utilities. As we approach that FID, we want to be prepared to fund the project. We've got a very strong balance sheet, but we still need some additional capital. And we need customers to be able to sell our product to, not in the not too distant future. So those discussions, like we talked about, are happening here at the conference. And we've been making significant progress building our team on the commercial side and our presence with the utilities. So as you can sense, quite a lot going on in a short period of time.
as you and I both know, the engineering process will be very complex, and you made mention of the fact that it's already 30% complete. How are you able to advance the project so fast in such a short period of time?
We spent quite a lot of time doing technical de-risking at a really rigorous level from our 2018 pre-feasibility study. And so that involved, actually initiating FEED before we completed the 2023 feasibility study. And so the work we put in advance has set us up now to move quickly forward. And so we haven't stopped. We went straight through FEED, finished the feasibility study partway through, and immediately transitioned into detailed design. We've had the same team working on it the entire time, and we started with a really detailed base of technical work in the first place. So we haven't had to do major new scopes of studies. We've really been able to focus on just the engineering. And so being right now at 30% total engineering within a year, that probably is faster than we're seeing others, and it may be a year or even 2 years faster than we're seeing others. Another element of it is our project. So our project is inherently simpler than most mining projects. We are not sinking a major shaft or opening up a big pit. So the level of engineering design and work that goes into that sort of scope is different than what we're doing with boreholes and wells with ISR. Our process plant is actually a pretty straightforward facility. We're only doing the back third of what you'd see in a conventional mill. So all of that also helps us be able to move the engineering forward faster. We just have a smaller scope of work than you'd see with something that's more like a mega project.
So let's talk about inflation. And as we both know, inflation has impacted every aspect of the mining industry. And even though the feasibility study was done in 2023, do you anticipate any further changes to CapEx or OpEx because of inflation?
Yeah, well, we're certainly going to see changes. Taking the engineering design all the way through to 100% ready for construction, numbers are going to be different, and you're going to make choices that are maybe different than the feasibility study in certain areas. But generally, we're not expecting to see a major impact from inflation. The reality is we saw already a very significant impact from inflation in our 2023 feasibility study. And we did have some design changes in there as well, which were positive to offset some of the inflation. But we took quite a lot in terms of inflationary increases already. And so I think that is a really key differentiator for us right now, is the fact that our study already took that wave. It was really 2021 to 2023 where we saw that really significant wave of inflation. The other part with our project is, because inflation is tricky, that's like a direct drive on cost of things. The studies often see, let's say, cost inflation, not from the cost of money, but from design refinements, depending on the level of effort that goes into the design at these different study stages. One thing that we've done that's been really useful for us to manage costs increasing is having completed the environmental assessment work before we did the feasibility study. So in our case, we already went through years of environmental studies. We already had an idea of what our envelope would be from possible environmental impacts and how we would have to achieve it with things like water treatment and plant design. So as much as we could, that was already reflected in the feasibility study. If you switch that order, you've got a design in your study that you think is feasible, but then you go through a few years of environmental assessments and you realize, well, it's actually a little more complicated than that. We're going to have to do this, and that. Okay, well, we don't have that in the study. All of a sudden that gets in there, and that could be a driver of cost change. So by sequencing it the way we have, I think we've also minimized the risk of significant change.
So let's discuss the timeline. When do you anticipate construction and production?
Yeah, our next key milestone is final investment decision, and our objective is the middle of 2025 for that. The multiple streams competing on potentially on the critical path, but really the critical path to that is permitting. So we're hoping to finalize the environmental impact statement approvals by CNSC staff this year, with a view of then having commission hearing and approvals next year to allow us to make that final investment decision. We have about a 2-year construction timeline, so that would put us on track for first production end of 27, beginning of 28. Now, all of this is actually quite consistent with what we've guided from the beginning. When we submitted the draft EIS in October 22, we said it would be 2 to 3 years. We're still on track with that. When we put the feasibility study out last year, our guidance and our official guidance on first production is still 2027 into 2028. So all of that's intact, but really it's that FID next year that sets that all in motion, and that's what we're focusing the whole team on right now.
Exciting times.
Well, it's been a long road, and we're getting very close.
So the other big news that was released earlier this year was McClean Lake mine. And Denison, along with its partner, Uranium, has made the decision to restart the mine. Take us through this process, what it exactly entails, and what would be the timeline moving toward production.
Yeah, so McClean Lake joint venture with Uranium Group from France. Denison's in at 22.5%. We've talked about McClean Lake for the last several years, but primarily because of the mill. We have a real world-class milling facility there, processes high-grade ores without dilution, has excess license capacity on top of the material it's processing from Cigar Lake under a toll milling agreement. And that's pretty much what we've been talking about. But yes, this year, we got an opportunity to remind everyone that we actually have unmined deposits at McClean Lake. And we did make a decision with Urano to restart mining. So we have a proprietary mining method that the McClean Lake joint venture has developed over the last 2 decades. It's called the SABRE method. So that's surface access borehole resource extraction. Very exciting. But essentially, we're able to mine from surface. We're able to mine high-value, high-grade cavities using jet boring from a surface drill rig. So really minimal environmental footprint, and also quite nimble. So little in the way of fixed infrastructure. And so that has allowed us to make an assessment on several of the smaller pods or deposits at McClean Lake, and determine that, look, this is an economic mining method. It's been commercially tested by the joint venture, and we've achieved rates of production through these commercial tests that we've used to then determine whether we can do this economically. So what it means right now for us is 2024, we're doing a sort of restart preparation program where we're getting the equipment and all the facilities that we already own back into working order. No major CapEx to get this project going, but also some development drilling. And you basically have to drill a pilot hole into the ore body area in 1 year, and then in the next year you come back in with the specialized tooling and you actually mine out the cavity using that SABRE technology. So pilot holes this year, and then 2025 we'll start extraction of the first pounds there. And the idea is that we're projecting around 800,000 pounds production in 25, so our share is just under 200,000 pounds, and then we're going to continue that pattern of pilot holes and then mining extraction in a staggered manner for the next 5 or 6 years. We're trying to approach another 3 million pounds of production at the McClean North deposit primarily. So this is pretty exciting for us. It'll be our first, return to active production in quite some time, but it's also really useful additional cash flow as we approach that investment decision on Phoenix. And so this will be a positive project, and it's going to generate several $1 million of positive cash flow for us at a good time.
And so it's going to start producing relatively quick.
We'll be producing and selling uranium in 2025.
In addition to Wheeler and McClean Lake, you will have a number of other assets in your portfolio. Why don't you take us through a couple of those assets, starting with Waterbury?
Well, Jimmy, we're really bullish on the sector and the cycle. And so while we have a laser focus on getting Phoenix built and generating all this enormous free cash flow that it's projected to produce, we have firsthand experience knowing that it takes time to get assets into production. And so we are working on 2 other major fronts, on the development side as well as on the exploration side. For us, a new discovery of high-grade pounds anywhere near that Phoenix plant has incredible potential to add value to our company as a satellite operation. So exploration continues to be an important focus. $10 to $12 million a year, earmarked for exploration on high-priority projects and targets. if we hit on one of those things in a meaningful way, of course, we'll accelerate that to bring that value right up forward. But on the development side, we're working on 2 projects right now that are pretty exciting. Both are ISR focused, which is our specialty. One is Waterbury Lake. We have the THT deposit there. This is a project where we're in partnership with KHNP, which is here at the show. They're the South Korean nuclear utility, state-owned, and they're our largest company shareholder as well. But we carried out some field test work there last year to validate the application of ISR. It was very successful. So now the focus is on taking a 2020 PEA for THT and bringing it forward to a PFS. And so we've got work underway for that. But similarly, we're working on the Midwest project. So here's one where we're a minority owner, partnered with Uranium, again, close to the McClean Mill. And Midwest is a great project, and it's been around quite a long time, actually. And Denison has quite a long history with it. Previously permitted or approved EIS, I should say, for an open pit mine. It's not a very good open pit. It's got a terrible kind of strip ratio, and the project was not advanced. But we're looking at reimagining it both under Sabre mining and more focused on our end as ISR mining. And so for the last 2 or 3 years, we've been carrying out concept studies and technical evaluations for ISR mining at Midwest on the behalf of the whole joint venture. So we're the minority partner. Orano acknowledges and actually appreciates that we have built this special skill in considering ISR in the basin, and they've got us doing the work on this project for ISR mining. Earlier this year, we carried out the first field program for ISR test work at Midwest, also very successful, and now we're progressing an internal concept study towards PEA. I'm actually quite excited about Midwest because we really don't have a basis to talk about the economics of ISR at Midwest until we have the PEA. And from the concept study, it's really positive, and we'd like to be able to explain more specifically to everyone how positive Midwest could be and how important a growth project this will be for Orano as well as Denison. We're 25% at Midwest, but Midwest has the potential, even with it just being 25% Denison, to be a really significant asset in our mix.
So you have a lot going on, which is going to require a lot of capital. So let's discuss your balance sheet. You currently have $121 million in cash and cash equivalents, have 0 debt, and you still have 2.2 million pounds of uranium. You sold down a little bit of uranium.
Yeah.
Maybe you can tell us the rationale for doing so.
Well, look, the balance sheet is an incredible strength for us. I mean, you put all those pieces together, we're $400 million of value at the end of our second quarter. Our CapEx at Phoenix is around $400 million. So there's very few, I would say, /no development companies that are pre-permitting, pre-project financing that are sitting with a balance sheet where they're essentially fully funded for their initial CapEx. That gives us great confidence to move forward. What we're doing here is really now working on the fringes of this. We do need some additional funding to be able to carry out our other project work and construct Phoenix, but the amount's small relative to our market cap and relative to the project. It's very attainable, and so we're focused on optimizing that. We do like credit for it. We think our project's well suited for credit, and with us being debt free, we're in a good spot to be able to take on some credit. Essentially, it's just filling in around the edges on the balance sheet side. And with our physical uranium, it's an incredible asset for us to be able to use to fund Phoenix. And I know that there's sort of a mixed view on that. Surely you think the price of uranium is going up, and why would you want to sell it? Well, look, I hate to break it to everyone, but we are in the uranium mining development business, so our objective is to sell uranium. Generally, we've had an incredible return on our physical uranium. We purchased it at a price under $30 a pound. We're not looking to put it into the spot market. I personally have quite a lot of experience in the spot market from my time as CEO of Uranium Participation Corp., which became the Sprott Physical Trust. So we're aware of how to properly move material in the market without an adverse effect. But we're talking about finding a responsible way to monetize, say, 2 million pounds to access 9 million pounds a year of production at a $16 all-in cost. Like, the return on that trade is incredibly positive for us. Our focus is on the majority of those pounds going into customer hands as part of our commercial negotiations, not for those pounds to flood the spot market and defeat our own objectives. We understand how that all works, and we're going to be very diligent about making sure that we raise our money at the best cost of capital for our shareholders without having an adverse effect on our own efforts to sell the rest of our production. So carefully being done, but it's an incredibly positive situation for us and our shareholders. I mean, the risk of significant equity dilution from our company is incredibly low, and that's very unusual for a non-cash flowing mine development company. Dilution risk is normally number one when you look at that. So I do think we've found a great spot, and our balance sheet is really an important attribute.
David, the CEO from Uranium spoke at one of the panel meetings this week, and he was stressing the importance of exploration, and he also mentioned doing further exploration in Canada. Do you think this is a trend that's going to continue? And maybe you could also speak to the importance of jurisdiction.
Well, look, I'm really encouraged to hear that. Urano is they're quite a good partner. They have long-term vision, okay, Jimmy? They're in this business like forever. They look at it as a forever business. You think of where they come from in France. I mean, how much of their power is coming from nuclear? It's like 60-70%. So they have a really close connection to this, and they're in this business for the long run. And exploration is important. We're in a depleting business, right? Like the resource business, you find deposits, you mine them, they're gone. You have to replace them. Exploration's how you start doing that. They're in a spot where they should be working on exploration, and then you have choices of where do you do it. Of course, we think Canada and Saskatchewan's a great place to work, and I'm sure they're doing the same sort of calculus and seeing we've got a combination of high grades and really a stable, reliable geopolitical environment. Facts are, where is the uranium in this world? And the uranium's not in the best places. It's in Canada, and it's really high grade and can be very profitable. That's all tick, tick, tick. Other places we have it, we have Kazakhstan, we have in Niger, and we've got, the Mongolias and then there's Australia as well, where we're not even allowed to mine it. So, put that list together, and if you had to pick where you'd want to do it, I think you'd pick high grades and stable, mature, regulatory, geopolitical environment like Saskatchewan, Canada. So makes perfect sense. They already have a significant footprint in Saskatchewan, and we're seeing investment from the world's biggest mining company with BHP and Jansen in Saskatchewan. It's a great place to do business, and it doesn't surprise me at all that that's where they'd want to focus on the exploration side of things.
David, as we wrap up, you've already summarized a lot of what's going to happen here in the coming months, but as we go into year-end, maybe you can just provide a few elements of what shareholders should be expecting in terms of news flow.
Yeah, I mean, we have a lot going on. We've covered a lot, a good portion of it. But I'd say we do have some significant news coming in the pipeline. We've got technical studies at Midwest and THT Waterbury, which are really could be quite notable. We have continued exploration work through the fall, and as I mentioned, any new hits or expansion of a high grade area near Phoenix would be really meaningful for us. And we have all those milestones on Wheeler. So the environmental assessment review process, that'd be really material to get that EIS through the federal review and a commission hearing scheduled. Then we could start to really narrow the schedule down and our efforts on the commercial contracting side at the same time. So quite a lot going on, and some really notable specific items that could materialize by the end of the year. So incredibly exciting time in our sector and incredibly exciting time for our company.
Well, David, that was a great overview, and I want to thank you very much for spending time with us today, and good luck with the rest of your meetings.
Oh, Jimmy, thanks very much for having us. We're really happy to be here at the conference, and we really appreciate the work you're doing to be here and bringing stories right from the conference floor to the people who are following our space. So thanks very much for that as well.